The first thing I do when starting a new trading session is manage any open live positions. Guys, we're risk managers, we're not risk takers. Preservation of our capital is always rule number one. So if we do have any live trades open, first of all, can we close some profit? We're here to make money, guys. We're not here to become an analyst on Bloomberg or to show off around a dinner table to our friends about all our analysis skills. We're here to make money. If there's profit on the table and you have a reason for closing that position, it's close to a level, or perhaps the sentiment's completely changed and you want to come out of break even, protect yourself, then do so. So when we start our trading session, we manage what's on the table now. If we can get a position stop loss to break even, become risk-free, we free up our risk, more exposure to go hunting for more opportunities, subject to rules being met. Once we get over that hurdle and we're in a comfortable position, I would always remind yourself of what news is out there for the day. An intraday trader, a day trader, cannot avoid high impact news throughout the trading day. But as a day trader, we must be certain that we have a thorough understanding what's out in front of us, what obstacles are out there. Is there any red high impact news heavily weighted to one currency pair? If there's tons of USD news, we might have a bias for looking at cross currencies, indexes, commodities, gold, silver, and so on, rather than going gung-ho on our dollar-related major positions that morning. So we have to make sure the coast is clear. Also, when we're thinking about things like hidden obstacles, this could be levels, pivots, moving averages, that could be blocking any potential reward we may have. So I always get my guys to ask themselves the question, is there room for me to make money before taking a live trade? So once you've managed any open positions, you've closed, taken profit, or reduced your risk by bringing stop loss to break even, we then check high impact news. The best site to do so is forexfactory.com. A little tip, make sure you change your time zone so you're in your personal time zone. And in the top right corner, you'll see a filter button. And you can actually exclude yellow boxes, which will be low impact news, so less likely to affect the market. You don't need to worry about that. Medium highlighted in orange, I actually take yellow and orange off of my calendar for the day. And I leave red high impact news. And then you'll see a little tick box that is highlighted in grey. This shows public days, bank holidays, and anything perhaps that may not have an immediate impact on the market, but you need to be aware of. When there's a USD bank holiday, Thanksgiving Day as an example, what we've got to remember is the dollar as a currency is still traded globally. So all of the institutions, hedge funds, guys that have power to move the market will still be pulling their strings with the dollar. However, at 2:30 p.m. GMT time, 8:30 a.m. New York time, when you hear the bells ring on Bloomberg and the official stock market typically opens, you will not get that impact from the US traders at their official opening time. So just to recap, the dollar as a currency is still traded globally. However, you will not get the impact you typically see on an American Open, a US Open. So something to always keep in mind as well. So we check the news, and as I said, as day traders, we cannot avoid the news. But what we can do is understand what may happen and perhaps pick our fights wisely. If there's a lot less news out on a currency pair, or perhaps no news out on a currency pair, we may take that as a preferred asset to trade rather than the dollar that's got tons of high impact news out for the day. That's going to be a real tug of war this afternoon. I would also recommend a website called forexlive.com. Forex Live is a team of 12 to 15 ex-professional institutional traders that give a running commentary on day-to-day analysis, updates, market movements, recaps, sentiment changes, and so on. Forex Live is great if there's been perhaps a bit of volatility in the market, you've seen a spike, you look on Forex Factory, there's a calendar of listed news for the day, and perhaps it's not on there. Perhaps Euro spiked, and you go on Forex Factory and say, wow, there's no high impact news on Euro today. Within a minute or so, the guys on Forex Live will give you a running update of exactly why the market moved. The headlines are great too. It will say things like gold hits all-time high, Japanese yen's the weakest currency today. So without looking at a chart, you can build a bias as to how that chart may look. As an example, if it says euros hit 118, blah, 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 you can say, yes, that was my level I was looking to get short from. So it can also be a reminder as what's happening out there. And these guys have got the credibility and awards perhaps to their experience does the talking, shall we say. So I would never be guided by a trade, but it's great for an update on market awareness, sentiment, and perhaps what's happening out there. If you guys are predominantly FX traders, there's a lot of commodity, indice, equity news that could perhaps influence some of your trading decisions on an FX basis. There'll be things like gold ETF announcements they announce that will help find you a trigger point when looking to trade assets, commodities, gold, and so on. So that's something to think about too. When you know the coast is clear, you go back to your watch list. Your watch list is something you should create a weekend when the market's closed, or if you are perhaps a scalper, intraday smash and grab style of trader, each evening you want to recap how today performed and tee up any potential trades for tomorrow. If you're new to intermediate stage trader, I would suggest you continue sticking with the trend, trading with the trend. Therefore, your watch list is going to be all pairs that are showing clean and clear direction or true cyclicity on a higher time frame. So that'll be daily direction or weekly direction. When you establish higher time frame direction, you find the bias of where this market's heading. You then use the smaller time frames, perhaps the 4 hour and 1 hour, which provide more bars, more cycles, more opportunities to go hunting and execute your trading positions. So the higher time frame confirm the direction, the smaller time frames are where you find your execution to pull the trigger to take the trade. So we've managed open positions, we've checked the news, so any currency pairs that could be impacted by high volatility news today. We've looked at any headlines to see if anything stands out. We've gone back to our watch list now, and we've identified 2 or 3 currency pairs that are showing clean and clear direction. This is when you then drop to the smaller time frames. Here at Financial Markets Online, we use an approach called top-down analysis. So we'll never skip a time frame. We'll work from the daily to the 4 hour to the 1 hour. For me personally, being a day trader, only trading the European market open in the mornings, I predominantly hang around that 1 hour time frame when I know I've got higher time frame confirmation. You then, if you're looking at something like myself, you'll then want to find the currency strength, most strongest currency and weakest currency in this trading session. The market's moved by strength and weakness. It can be as simple as that. What we may think, and what a lot of new traders think, is 2 strong currencies. So Euro's really strong and GBP's really strong. 2 strong currencies, the market's going to boom, it's going to go through the roof. But they really don't. It's a constant fight. So 2 strong currencies are just going to bang heads. We need 1 strong currency and 1 weak currency to get what I call a burst of excitement, that quick directional move. And that's what I go looking for first thing in the morning. I want to identify the session's strong currencies, the session's weak currencies, put them together and go hunting for that burst of excitement. Typical targets could be anywhere between 20 to 50 points for me personally on a European Open session. We can include DAX, CAC, FTSE as well if we want to look at bringing in the indexes. Same analysis, different style of momentum, more aggressive I would say in terms of how volume's input into that market. And essentially that's what we want to do. So you want to have a clean and clear plan before you approach the market. You want to make sure the coast is clear, but as I said, it's important to manage any live positions. We're risk managers, guys. We're not risk takers. I say this time and time again. So preservation of our capital is rule number 1. If we have no money in our trading pot, we're going to make no money. The more money we have, the bigger monetary value a small percentage means to us. Therefore, trading becomes easier. So guys, we've got a full team of traders here on the trading floor in Chelsea and Dubai. If you're serious about getting involved, perhaps you need a bit more structure in terms of how you're entering or exiting the markets, get in touch. I'm more than happy to give you guys a hand. Take care, guys. Bye-bye.